Today's update is pretty much the end of January. We've got a few more days left in January, but it looks to be 2026 looks to be following, exactly in the footsteps of 2025. We're seeing total sales, which is the sales volume, the number of houses being sold in Calgary, declining. Now we're seeing a decline on this graph of almost 20%. Last year, midway through the year, those declines were around 30%. So we're starting to see the sales volume the decrease start to slow down. It's still quite high, but it's starting to slow down. But the price or the column that we want you to look at is the average price, and you can see we're still up. We've seen positive numbers in that section of the graph throughout 2025 and even into 2026. Yes, it's only 2.5% right now, but it's a positive. Prices are still going up in Calgary. We're doing much better than a lot of the large centers in Canada. And, as a real estate investor, that's what we want to see. We want to see that equity growth over time. And we have seen it in the last 5 to 10 years here in Calgary.
Yeah, and not only that, for the new people out there, everyone's always wondering, have I missed the boat? Is it a good time to get in? It's always a good time to get in. We could say that because we've actually bought properties at the peak of the market, at the bottom of the market, in the middle of the market. And at the end of the day, it's all about the three rates of return. You have to remember this. You can't complicate things. It's all about buying a property. The property appreciates over time. And this magic thing happens in real estate, which we absolutely love. This appreciation happens. You may go through a year. We went through it about 2 years ago, I think it was. The market shifted $100,000 within a year and a half. Now it is pulling back a little bit, but as you can see, the numbers are still up. Overall, last year, where did we end up?
We ended up just around the average, the 75-year average, a 3.5% increase.
So it ended up at 3.5%, and that's all you really need. Where is the market heading to? You know what? We believe Tim's going to get into some graphs coming up on population and stuff like that. But you look at Toronto and Vancouver, Calgary is still so affordable. You can still buy cash flowing properties here as an investor, and that is only going to help the market improve over time. But once again, with the three rates of return, you've got the appreciation going up, you've got the mortgage getting paid down, and when you own multiple properties over time, we sat down with some crew members actually not long ago, and we explained to them that we have investors that their mortgages alone are getting paid down $5,000 a month. So when you have a portfolio like that, it makes you sleep pretty good at night, knowing that it's growing no matter what. Even if the market's soft, it's still growing. And then, of course, you have cash flow, and you have to buy in the right communities here and buy the right types of properties to find the cash flowing properties to help you propel. And we always say that you need to cash flow. As soon as you have to pull money out of your back pocket, your days as an investor are limited. So that is key when you're working with us.
Yeah, so part and parcel with this market update, the Calgary Real Estate Board had their annual forecast meeting this week or earlier this week.
Yeah.
And some of the points that they went over that we want to, let you guys in on, one of the things was population. And they're predicting that our population is still going to grow. You're hearing news stories where Canada is restricting immigration. We're trying to lower it down because it ran rampant the last 2 years. Too many people came in too short of a time. And that's partially what caused house prices to go up so high and rents to go up so high in the last couple of years. So the government of Canada is making a significant effort to lower that level of immigration. But we see here that Alberta's population is forecast to grow 1.5%, and Calgary's is forecasted to grow 1.3% in 2026. Now, that seems like a low number. It's a percentage. But what does that translate into actual people?
Yeah, roughly around 20,000 people. And you know what? In the boom times, I remember in the boom times, we we're getting 30,000 people. So, it has slowed down a lot. And I don't even believe these numbers, to be honest. I believe more people will be moving here. I bet you at the end of the year when we look back at it, just because Calgary has the infrastructure. There's jobs here. Someone actually said to me, there's actually, what's the big developer building out in Aspen and down the road here? Anyway, I was talking to Eric there. He's one of the managers, big developer in town. They've got about $1 billion worth of projects on the go. It's not Truman, it's another big developer. Anyway, the reason why they're going ahead with these big projects, and that's why I love talking to developers, is because you get a feel if they're spending money. You're like, well, why are you guys going ahead? Like in Aspen, I think they're building 13 buildings just down the road from my house. 13 buildings, okay? It's like 600 units. I'm like, who's moving it? And they're like, we're going ahead with it because it's the first time ever in Calgary that we have a population shift. And at the same time, we have jobs to support it. So they feel comfortable enough. And these guys are spending not millions, billions, right? They're comfortable enough to lay down the money and move these projects forward because of this scenario. And it's rare that this happens. And so it's funny, we're going through this little shift right now, and I don't really think, Tim or in Carly, that it's really the market. It's really Trump. It's the Trump effect, right? It's like there's some uncertainty out there. We don't know where that's going. And so people are holding off. The other thing they're holding off on is interest rates a little bit too. And interest rates, we feel they're where they should be. So, and they're at a point now where it's still affordable getting in. And if it does go down further later on, I don't think it's going up, but if it does go down further later on, that's win-win anyway.
Yeah, speaking of interest rates, there's another Bank of Canada announcement coming later this week. We anticipate it to just stay the same. So do most experts out there. But we were doing the math on a suite of property that we have listed, and with rates at where they are right now, 4.5%, I think is the bank rate, you can still cash flow quite a bit if you buy a suite of property. And that's a little different than it was 2 years ago when rates were 2, 3, 4% higher than they are now for investors. So with rates the way they are, you're seeing cash flowing properties again, which is great, which is why we're telling people to get into the market before the spring market rush happens. And then you might be into some competing offers on these really A quality properties. So the next thing we're going to look at from that CREB forecast is the rental rate. Now, unfortunately for investors out there, rental rates are on the decline a little bit. They did reach all-time highs in probably mid 2024 because of what we just talked about, the influx of population. But what we're seeing now is the builders shifted, the developers shifted, and they went into high gear building purpose-built rentals. And you can see this bottom here. There's still almost 12,000 units under construction right now in Calgary. Those units should hit the market in 2026, maybe a little bit in 2027. So you're going to see more rentals flood the market, and that will have more downward pressure on rental rates for that type of rental.
Yeah, but that type of rental, and they're normally condos. Like we were just reading in the paper yesterday that behind the library downtown in East Village, they're putting up a tower there. And I'm like, who's moving into who's moving into that? I think that East Village is going to take off. I was walking through there on when was the LA game on Sunday night, LA against Flames, and you could just see the new stadium going up, and you just know that area is going to take off. But we're a few years away from that. But if you're providing or you're buying the right types of properties, and we were just saying people don't want to live in condos. Like we have someone in our office that rented a house, and he's paying $3,600 a month with a double car garage for his house every month. And he's like, geez, it's expensive. But then his next best option on the west side was to go get a townhouse from or a condo. And he's like, I don't want to get a condo. So people don't really want to live in them. So if you're providing something out of the norm, like the suite of property we've got in Highwood right now, we listed it for $650,000. And the numbers Tim was talking about on the interest rates would cash flow. We're getting 2,500 up, and then we're getting 15 down, and then the garage would rent for $400 because it's a triple car garage that's heated. So when you add all those numbers up, the numbers still work. And those sorts of properties, if it has a wow factor, like a triple car garage, or it's been updated, or it's got an extra bathroom, those types of properties you have to look out for because they'll rent out faster than other properties.
And speaking of property types, Carly, you've got a property in Richmond, very close to where that development is going to be, where the old Viscount Bennett High School was, and there's a bunch of towers going up there. So can you explain the type of rental that you have and why you think that it'll compete a lot better than all those little apartment buildings they're going to put up in the school site?
Yeah, absolutely. So the rental that I have is a house on a large lot. So it has 6 bedrooms and 3 bathrooms. So I have been Airbnb-ing it in the summer and then long-term renting it now. It rents in the summertime anywhere from 600 to 800 a night. Obviously, it's not full all the time, but it's full every single weekend. And then when we're looking at more long term, it's around $5,000 for the month.
Yeah, so comparing that to a smaller apartment in one of the buildings that are going to go up on that vacant site, it's like apples to oranges.
Yeah.
So if you're thinking of investing around there, you probably don't want to buy an older condo because you will compete with all these new purpose-built rentals.
Yeah, exactly. You need to watch where you're buying, really. Yeah. And you need to work with realtors that understand that. Like you can go buy in new communities right now. And we are shocked. Like when we were saying in our investment tip of the week for Crew TV that property prices have gone down $100,000 in new communities, we were shocked to find that out. Like it's people can't even sell. So they bought like 2 years ago. They might have bought 3 years ago or 2.5 years ago, pre-construction. Now these areas are built out. They're taking possession and they're worth way less. So you're going to see newer communities stall a little bit with the developers putting a pause on it. And hopefully that will bring prices back up to where they should be. So we would not be investing in brand new and we would not be investing in condos downtown in Calgary right now just because of the supply levels.
Yeah, so that's our market update. Danielle DeMarco is our mortgage expert. She generally gives her mortgage update. She wanted to wait until after the rate announcement so she can talk about it next seminar. So if you are looking to get financing for a rental property or refinance to get that capital, Danielle DeMarco is the one to go to. She doesn't just give you a mortgage. She develops a real estate investment plan for our clients, and she's very good at it. Take down her number and email there and give her a shout if you need mortgage services.